morning, everybody. Welcome to Verified Investing Studios. This is the Game Plan, and my name is Gareth Soloway, Chief Market Strategist right here at verifiedinvesting.com. Lots to talk about today, as we always do. We had economic data that just broke about 30 minutes ago. Jobless claims coming in essentially at expectations around 219,000. Now, we also had some GDP. GDP came in line essentially with estimates, maybe even a little bit better than estimates here as well. And there was a PCE quarterly number that came in, which showed inflation was down-ticking just a little bit. This is not the big PCE data tomorrow. That's tomorrow at 8:30 a.m. But either way, it does give us a little bit of a clue. And what we did see, the markets were down a lot because of CRM's earnings, Salesforce earnings, but they did bounce a little bit on this data that showed a little bit better inflation than expected. All right, into the action we go, guys. And they're very nice catch, by the way. As we get into things here, guys, let's take a look at the pre-market data. So this is, again, the SPY chart, which is the S&P tracking ETF. We get the pre-market data from this. This is the 10-minute chart, so it shows us on a 10-minute basis what the markets are doing. All right, so initially, basically what we have here is the price action. You can see the rollover that took place in the overnight, and then again, we are trading back up a little bit off of that. So we're off of the lows, but we are still down from the close yesterday, and that's something to kind of keep an eye on here on the SPY. So we are lower on the day. Now, the reason for this drop, and we're going to get right into that now, are these earnings on CRM. Take a look at this drop. If you watched Trading the Close yesterday with me, you saw this happen in real time, this collapse. And again, interestingly enough, the level here, this 224 level, is a major technical level. Look at how price is bouncing off of it in the pre-market. Now, I'm going to go to the daily chart so you guys can see exactly where this level comes from. Like, how does Gareth find these levels? And the answer is pretty, at least for me, it's simple at this point, right? So we basically have a trend line right here, and we can even extend it out just a little bit. Bear with me. Let me get that straight, that line straight for us right there. But basically what we have is there's a big gap in here, and here's the gap fill. You can see there's a little bit of a price action shelf right here as well. And there also goes back to this zone right in here. So this, to me, is a big level to watch on CRM today at 224. Is this a level I would consider swing trading it at? Probably not. But potentially day tradable level for a bounce back to 230, for instance, or even a little bit above 230. That is a possibility. Now, if it breaks below that, you do have additional support right here. There's a shelf right here, as well as a double bottom in that range. Those would be your two subsequent lower levels where you might get trading opportunities today on CRM. And basically CRM, just to summarize, you guys can always go to the regular news for this type of stuff, but essentially they came in with their guidance much lower than expected, and that really freaked people out. Remember, this is a big company, $260 billion before this drop of about 17% today, and so this does put a slight cloud over how good the markets have been lately. Now, I want to point this out, guys, is that, listen, we have a bunch of big earnings today after the close. I will cover them live on the Trading the Close show at 3:55 p.m. to about 4:10 p.m. today Eastern Time. But we have to continue to watch today our daily candle on the SPY. So, number one, if we look at the big picture on the S&P 500 or the SPY, we remember that we're right into this big trend line. So this is your level going back to that 2007 high before the Great Recession. And then we had our high in 2021. And we've now tagged, just a few days ago last week, our high here in 2024. Now, zooming in, what am I watching for? What I'm watching for is, do we ultimately confirm the reversal engulfing candle? Reversal engulfing candles are very bearish, especially when they occur at these highs. When you're basically at an all-time high and you get a reversal engulfing candle, that has to make you pay attention. It's an indicator that probability-wise, if you looked at 100 of these or 1,000 of these, a majority of them would dictate a near-term top with a decent pullback behind it. So what am I looking for in terms of confirming this move? We have the low of the reversal engulfing candle, which I think is around 224.75. I want to see a daily close below that level. To me, that would confirm the move to the downside. All right, and again, essentially what that does is, and when I say confirm, does it mean it's 100%? No. It essentially takes the probabilities from, let's say, 70% and probably raises them to 75 to 80% chance that this is a top once you get that confirmed. On the other side of the coin, always remember, you need to know where your candle formation fails. Where does it get negated? And any sort of daily close above right here, the high of that candle would then negate it. So remember, as a trader, you are just taking what the chart is showing you and taking that information and acting on it. You're not putting your own preferences, your own biases, nothing like that. Trust me, I've tried that in the past and it doesn't turn out very well. All right, so we know what we're looking for today on the SPY or in tomorrow's action. Do we get that tomorrow on the PCE data? Do we get it today on the CRM news? We will have to continue to watch. But again, markets right now are lower. If we flip back to our intraday here, guys, if we just go back out like this, we can see, yes, we've come off of the lows. By the way, this is where we closed yesterday right here, and this is where we are currently trading here. Right now, as of where we're trading, we are below that engulfing reversal candle low. But what do we know about the markets? The markets have this tendency to find buy the dippers, and they will lift the market up. So we're going to see if that happens today during market hours. All right, other stocks in motion today, guys. We do have AI, C3 AI, which is up on earnings. It's not up a ton. You can see initially it jumped, then pulled back, then floated to a nice little pre-market double top. Now coming back in. By the way, just pattern recognition for you guys. What type of pattern is this? What type of pattern is this? So this is a double top, right? That would be resistance. What happens? Price came down. Okay, then you got a down move with sideways consolidation. What is that called? That's a bear flag, or in spirit of bear flag. And look at what price is doing. It's following the chart. Even pre-market follows the chart. As long as you get volume, and in C3 AI has volume pre-market, you will see the pattern still play out with a high probability amount of time. Now, in terms of trades, this isn't up or down enough in terms of this one. This up, but it's not up enough for me to play it as a trade or have levels even that I'm watching. Now, that's different for this stock. Look at this, guys. This is Kohl's, all right? So for me, this is one that gets my attention because I look at Kohl's as being kind of a mid-level retailer, right? So it's not like the low Dollar Generals. It's not like the high-end luxury goods. The Kohl's is kind of right in the middle area, the kind of the meat and potatoes of society, and their earnings were horrendous. All right, you can see the stock price. We are down over, I think, about 30% plus on Kohl's pre-market, trading at $20.48. I do have tradable potential levels on this. If we take a look and we zoom out, the first level here that we're keeping an eye on is this pivot low here at around $17.85. At least for me, that's what I'm keeping an eye on. Now, based on where we're currently trading, that's only a dollar and change, $1.75, whatever it is, lower or a couple bucks lower than current levels. So again, we're trading just above 20 bucks here. And the line is, again, just below 18. So, again, a little over $2 below that level. But that double bottom should be significant support if it flushes into it as a potential day trade or even maybe a quick swing trade. It's really just tricky to know based on current market conditions. Like if the market dumps out tomorrow on PCE data, it probably drags Kohl's down. So it's a little trickier on holding these overnight when you get other factors like economic news playing an issue with the market. But either way, what a drop on Kohl's, guys. Now, Path, look at this one, hammered to the downside. In terms of levels on this, I think 1075 is the level on this one that I'm watching. If we take a quick look at this, there's a double bottom down here. And by the way, a lot of these charts, and I was just commenting to my head trader Ben about this too, is that there's a lot of charts that are getting close to 52-week lows or even multi-year lows. And to me, that speaks about the divergence in the market. We know that just a couple days ago, the only reason the S&P eked out a small gain was because NVIDIA added 22 points to the S&P on that one single day. Otherwise, the S&P would have been down over 20 points on the day. And so it's a very much a diverging market in terms of leadership. I know the mainstream media is telling you probably differently, but to be honest, you look through a bunch of these charts and they're just getting crushed. Either way, the level down here is very apparent. We have this low here. It's around the 1050 to 1070 175 level. And again, keep an eye on that one on Path. PATH is the symbol on that one. Now, after the bell today, we have Dell reporting earnings. This stock has had a meteoric rise on the AI play here. Dell used to be computers, building computers. Now it's data centers. It's all about data centers. Their growth is impressive, no doubt about it. The question is, will earnings come out and justify an over 50% move up in stock price in just basically in just a month, really, at this point? Incredible. So, literally a month ago we were trading at $1.50. Now we're above $1.80. Incredible move. Earnings today will be important, and I'm going to tell you why. It's not that, listen, Dell's market cap's about $120 billion right now. It is a big company, but it's not like $1 trillion Nvidia. But why this is important is because if they talk any sort of slowdown in data center spend, or if they don't really come out blockbuster earnings, what they say and their stock price will influence the other AI stocks and ultimately either push them up more if it's really, really good and Dell goes up, or bring them back in if Dell comes down. So that's why Dell is so important today, because it will cast either a shadow or sunlight over the rest of the AI space. Costco is one that I have to say, guys, I mean, listen, I go to Costco pretty much every weekend, but I will say that it's into a ton of resistance up here. You can see these multi-trend line levels here. We have this trend line going back to, this is, I guess, 2023 high here through this high, right up into this range here. And we have these lower pivot points here as well. So right above this 800 level, there's a lot of resistance on Costco. They report earnings after the bell as well, and I'll cover them live in Trading the Close today. All right. On that note, what I do want to do, guys, and by the way, I mean, we could go over NVIDIA's chart, but last I checked, it was down a little bit. There's not much new there. There's no top signal that I see yet. There's no reversal candle, so you still have to just watch for those signals to let the chart tell us when finally it tops out on the levels here and the chart. Okay, next up, what we're going to do is we're going to do our drawing, so let's quickly bring up our YouTube and Twitter scanner for comments. Yesterday, we did have a winner. The Wheel of Appreciation landed on the $300 VI credit. So let's go into that right now. And there it's spinning as we speak. And what do we have today is a winner. And there it is. Yasser Al-Fars. Fars, I think I'm saying that. And I apologize if I'm not. But either way, congratulations, buddy. That's amazing. And again, reach out to Lawton at verifiedinvesting.com. Next up, as we always do, we'll go right into spinning this, guys. Let's spin it right away. Find out what the next prize that we will be giving away will be. And let's go on that front here. One-year membership to TradingView, guys. So that's worth about $600 on TradingView. Amazing. The premium TradingView membership right there. So that will be given away tomorrow. All you have to do is share this stream on one of your socials and then post a comment to let us know where you shared it so that we can verify. And again, you will be entered into winning a one-year free membership of TradingView. Very cool. All right, on that note, we're going to take 30 seconds to thank Lux Algo for being an incredible sponsor here at Verified Investing. Their link is below, guys. Make sure to check them out. They offer so many amazing scanners and so on and so forth. So check them out, and here's a 30-second break.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
All right, guys, we are back right into Bitcoin and crypto analysis. Then we'll get into the commodities. But basically what we see is the continuation of this chart holding steady above the channel, right? So we have our very clear channel, pivot low to pivot low, pivot high right through here. We got above it. We came back in. We tested. And now 3 days in a row, we've tested that line. It is still holding. So as of now, the bias remains positive on Bitcoin as long as you don't get a daily close below that line. And so far, it's held up amazingly well. So you got to be impressed with Bitcoin's resilience. Yesterday, the stock market was down. Granted, NVIDIA, which is my indicator for risk on, risk off, NVIDIA was up yesterday about $9 or so. Today, we're seeing, again, the stock market down, but even Bitcoin is holding up at this point. So as of now, Bitcoin is finding these buyers even in spite of a little bit of weakness in the stock market. And again, the idea here is that as long as it holds here, eventually you get that move up, which should take us to that double top 74,000 level up here. That'll be the next big resistance level and test for Bitcoin. All right, next up, quickly we'll look at Ethereum here and see what Ethereum's showing us. Now, Ethereum, again, got the ETF approvals that they needed, or at least that other firms, so they could launch those ETFs. And we did see the big initial move. And then since the ETF approval, it's really just gone sideways. So we aren't at the double top yet. We're not at support. This is what I would call, for myself, a no touch. And what no touch means is that you're not at support, so you can't buy it, and you're not at resistance, so you can't short it. So you just sit back and just say, all right, well, yeah, let it do what it wants. If it wants to come down like this and dump out, if the crypto markets dump out, there's a buyable level right down here. And if it wants to turn up and shoot up, maybe there's a shortable level around 4,100. I actually wouldn't short it there. I have a level at around 42 to 4,300 that I'm eyeing, which is an upsloping trend line. I'll show you guys that another time. But either way, in this range, you know, again, there's not resistance close, there's not support close. So if you're not in it, for me, as a technical trader, and again, I'm a shorter term technical trader, you just sit back. You say, all right, I'll go to another chart and I'll look at another chart. Now, I will show you guys, we'll do some Cardano here. I haven't done Cardano in a while. I know a lot of fans out there of Cardano. So ADA USDT we'll take a look at here. And the kicker here on Cardano is that, believe it or not, it's forming potentially a bearish pattern of consolidation. And that's the only thing. And by the way, I actually like Cardano overall, but for the most part here, there's just a scenario where it hasn't been able to get its mojo yet to the upside. And what I mean by that here, you can see it very clearly, is that if I were to ask you guys, and I'm assuming some of you guys have been watching for a while and know your technical analysis, if you have a down move and then you go like this, what type of pattern is that? It's a bearish pattern. And so it's up to me to just recognize them, and it is what it is. And so what we're seeing here is that sort of pattern. And so as of now, it's still holding support here around 44, 43 cents right down here. But if that breaks, I have a level that I would be interested myself at buying at around 35 cents. And 35 cents, I think I would step up there. Now, again, does it mean that it will break down? No. I mean, a bear flag can fail, absolutely. But the beautiful thing about it is we know when it fails, right? If it breaks above this trend line, very clear. If we get price to trade up here, let's say above 50 cents, now you've broken the bearish pattern and you'll get momentum to the upside. And that's the beauty of being a trader, is that you want to isolate down your technical levels, know where it's bearish, where it breaks down, where the bearish pattern fails and breaks to the upside, and it gives you these amazing additional insights that give you really control, right? It's all about having control and understanding the likely scenario and the likely outcome. Gold today, guys, a little sideways chop. We were down earlier before the dollar fell and the yields fell on the back of the economic news today. But I would just caution everyone that the news today is kind of second tier. It is giving a reprieve after two big updates on the 10-year, but for the most part, it's all about tomorrow's PCE data that will be out at 8:30, and then we're going to either see this bearish, and listen, same thing, like we just discussed on Cardano, right? What type of pattern is this potentially forming, right? So again, you know, listen, we'll see what happens tomorrow. If it breaks back above this upsloping trend line, it flips to bullish. As long as it stays below here, that's your probability-wise, and I'm talking strictly from a probability standpoint. That's bearish consolidation, so probabilities favor the downside near term. You guys know I'm a huge bull longer term. Silver, a little bit of a pullback here on silver. You continue to be at this 3250 level on silver. That's massive resistance. Historically, when you're looking at a level, and in fact, I'm going to show you guys this level. I got enough time today to really go over this. So what I want to do is I want to flip to my weekly chart on silver, and we're going to zoom out here and go all the way back to basically 2008. And what I'm going to do is I'm going to take a trend line from 2008, extend it. There's a pivot point in 2013, and out through these levels here. And this is the line that really, for me, and I'm going to make the line bigger so we can all see it, this is a line for me that is very, very technically important and hard to break through on on an attempt here. So here you can see, right, this trend line. So you have your high pivot in '08. You broke here, and then you retraced to the scene of the crime there. Then you went right here, here, and then what did we hit? And that's why price stopped on silver at 32.50. Now, the reason why I'm saying I'm skeptical about a breakout in the very short term, like over the next few days, is because hitting this line after such a distance is very hard. I mean, like basically this wall has reformed. And so more than likely, I think what has to happen is you want to pull back and consolidate like this and then have that bigger breakout. So maybe a pull back to $29, $30, give it some time to energize, and then eventually I do think a breakout comes. It would just, that, and again, I'm just looking purely at history, at trend lines like this. It's hard for them just to come up and just go boom to the upside. All right, they need a little time to consolidate after such a big move. Remember, on the weekly chart here, you basically have almost gone straight from the low to mid 25s all the way to 32.50. That's a big move for silver. So just give it a little time. I still think it will break to the upside. Oil here, guys. I talked to you guys yesterday. This drives me nuts, but it's part of real trading, is that I literally had a short that I wanted to take right at this line. I just didn't get filled. I talked about this yesterday with you guys in this game plan. Maybe some of you guys got it. Congratulations if you did. Price collapsed yesterday, collapsing today again. It is what it is. I didn't get filled. So that happens sometimes. That's what being a real trader is all about. Sometimes you get filled, sometimes you don't. The key is the discipline to stay with your level and not kind of fudge the level and just be like, oh, whatever, because over time that eats away at your profitability. All right, in any case, I still think overall we're headed lower on oil, down to the low 70s, maybe even below 70 here. But again, that was your good resistance level right there, and it so far is playing out in spades. Another thing that played out in spades was natural gas on the short side. I did take profits yesterday, so I will say to you guys that. Basically, we had fallen 15 plus, now almost 17, 18% off of our recent highs. I was in the money pretty nicely. I said, you know what? I'm going to book it. Even if natural gas goes lower, that's fine with me. I don't mind. I don't need to get every last cent out of a trade. I just want consistent profitability, and that's what I try to deliver to people that follow the services, smart money stocks, crypto, and commodities at Verified Investing. In any case, we are down a little bit more. Where would I be a buyer? So remember, we were long down here, then we went short up here. Now where am I going to go long again? Potentially, and I have a level right in here, right in this vicinity. I would say it's right around 235, give or take. And again, I'm doing my best to keep this line. 230 to 235. If we pulled back into that level, I would probably, and I say probably because I don't know how the chart will look in a week or 2 weeks or as long as it takes to come down there, but I would look at that level as being a good opportunity on natural gas for a bounce. The best scenario, by the way, is if it crashes straight into that level in the next few days. Then it's like, okay, now you're going to get your bounce. That's the biggest bounce. If it takes longer, still should bounce. But again, you want, at least for me as a trader, I love being in and being out. That's the safest for me in terms of trading. All right. On that note, guys, I think that's where we'll finish up for the day here. So let me just grab this and we'll just end it with this. Don't forget, guys, make sure you share this stream out there. And again, as I always say, I appreciate each and every one of you guys tuning in daily. I'm hopeful that I'm continuing to shed light on the charts, education, and that's what Verified Investing is all about. I want the retail investor, the John Q. Publics, if you will, to be having as much information that the institutions have as I can give you guys. So everything I know up here, I hope to convey it to all of you. Thank you all for tuning in. Have a great rest of your day.